Good evening. Thanks for joining us. This is NTD Business, and I'm Paul Graney. The stock market seems happy with more stimulus on the way, but with company valuations at now historic highs, is there still opportunity for old-fashioned value investing? Gas prices rising and could go even higher. What's causing the price hike? And America is less economically free than it was before. We talked to the Heritage Foundation about its latest economic freedom report. That and much more coming up on NTD Business. The latest spending bill is on its way to President Biden. House of Representatives just passed an updated version. House Democrats used an uncommon budget process to push the package through, so they didn't need any Republican support at all. All Republicans voted against it, saying it's excessive, it's wasteful. One Democrat voted against it too, but overall they say relief is much needed.
The American Rescue Plan is aggressive, no doubt about it. But researchers and health professionals have told us this is what is needed to scale up testing and tracing, to address PPE shortages, and to speed up equitable vaccine distribution.
This bill is not targeted, timely, or tied to COVID. Only 9% of this massive $1.9 trillion package goes to fighting COVID-19. And outside of stimulus payments, nearly half won't even be spent this year.
The bill includes $1,400 direct checks to Americans, $300 per week unemployment benefits, $160 billion goes towards vaccines, distribution, testing, and $350 billion goes to state and local governments. A nonpartisan budget group says Biden's overall package could end up costing twice as much. That's if some of the temporary measures are extended beyond their expiration dates. The White House says Biden plans on signing the bill on Friday and then hitting the road in the near future to convince Americans this was a good idea. Prices at the pump are rising, and they could go even higher by summertime. We hear from some experts on what's causing that hit to American wallets. NTD's Arlene Richards reports.
The average gas price has soared to over $2.80. This after OPEC agreed to maintain production cuts last week for most countries. Former Shell President John Hofmeister says OPEC's announcement is a factor behind the rising prices.
So the consequence of OPEC not increasing production at a time when world demand is going up, at a time when U.S. demand is going up, creates a psychology of scarcity, and that leads to gasoline price increases.
Hofmeister believes OPEC wants to harm America, taking into account President Biden's dislike of fossil fuels and climate change priorities.
What they're doing in reaction is saying, you don't like gas and oil? Fine. We're not going to produce it. Watch your American consumers lose money from their pocketbook.
Another reason is low supply amidst surging demand. Companies are focusing on their shareholders because they haven't been getting enough cash.
Or have been spending too much capital for too long, and so they're withholding the new money going into more oil production.
Oil investors say Biden's policies will also raise prices.
And they're not allowing us to drill in New Mexico on federal lands, which is one of the Permian Basin. The Permian Basin produces 40% of the oil in the United States, over 40%. If we're cutting that off, we're going to cut our supply off.
Some predict oil prices will soar even higher. Shell's former president suggests Americans will be paying $3 per gallon by summer. Arlene Richards, NTD News.
The United States is falling down the global economic freedom charts, so the Heritage Foundation says. It regards economic freedom as the fundamental right of every human to control their own labor property. Heritage's yearly report measures rule of law, government size, regulatory freedom, and open markets. The data for this report is from the middle of 2019 to the middle of 2020, so part of the pandemic at least is included. America fell back partly because of out-of-control government spending is putting U.S. fiscal health at risk. I talked to one of the report's authors, Anthony Kim, and asked him what Heritage regards as some of the biggest threats to global economic freedom.
I was a bit surprised that we somehow maintained overall kind of stability in terms of economic freedom as a word collectively But I think it's very clear to many of us, you and me and other audience we have, this is an ongoing battle. This is an ongoing struggle between big government, more government intervention policies versus more private sector driven free market policies. I mean, we will not have one single bullet for this pandemic. Obviously, this is a really complicated global economic crisis we never seen before. But I think that the direction we are heading is that not that all pessimistic or gloomy. I mean, pandemics and crisis, let's be candid, on a longer time period, they come and go. But we need to be aware that we need really sound, good economic policy, because good economic policies will be good public health policies.
And we see the head of the Heritage Foundation kind of calling out China as a threat to economic freedom. Do you guys look at, say America as this beacon of freedom, or people would think of it as the kind of leader of the free world, and this almost, how could you put it, tensions with China, who many would consider on the other end of the spectrum? Is this an important aspect to keep an eye on?
I tend to think so more than ever, because these two independent big economies, we're talking about, once again, United States of America and People's Republic of China. I mean, these two gigantic economies, they are not only far apart from each other in terms of physical location, one in here, North America, the other in Asia, but we happen to be very different from how we operate in terms of political space as well as economic space. So different values, different norms. I think what really matters going forward, especially under this pandemic, ongoing pandemic situation, more than ever, freedom matters. Economic freedom, political freedom, transparency, and openness. I think that's what really matters. And I think that that's a kind of disguised blessing we have seen from this pandemic. So I just have to emphasize transparency and openness. They are important more than ever, and we need rule of law.
Yeah, well, a lot of big choices for people all around the world to make. Mr. Kim, appreciate it. Thank you so much.
Thank you for having me.
Stocks were mostly higher today, with the Dow rallying to a record high. It rose 464 points, or 1.46%. SP 500 gained 23 points, or 0.6%. The Nasdaq fell, but just a little, 5 points, or 0.04%. That rotation into sectors like energy, financials continued today, as investors probably betting on consumer spending improving as the economy reopens. The Nasdaq, though, it's fallen 7% from its February 12th record. CPI rose 4.4% today, in line with inflation expectations. Core CPI, which excludes that volatile food and energy categories, edged up 0.1%. Warren Buffett's Berkshire Hathaway is on the move as well, up about 2.5% today and up almost 9% since last month. It's been helped by that big sell-off in tech stocks and other growth stocks this past month. Growth stocks are companies that have the potential to significantly outperform the market in the short term, but they tend to be more volatile and trade at higher valuations in relation to their earnings than other stocks. Buffett, on the other hand, tends to invest in value stocks, which are now outperforming growth as that economic recovery continues to happen. Buffett buys solid companies at low valuations and likes to hold them for long periods of time. I can give you explosive growth, but Buffett values patience in investing. But with stock market valuations in general now at historic highs and bond yields at record lows, traditionally another essential part of value investing, is it still possible for investors to follow Buffett's philosophy? Ask Lance Roberts at Real Investment Advice.
Over the history, value outperforms growth the majority of the time. Over the last 10 years in particular, there's been a big underperformance relative to growth stocks. And a lot of that's been because of the environment that we're in. We're in a changing economic environment, more technology, these type of things. And the problem is that when you look and you say, well, value's underperforming, that doesn't mean value's cheap. And that's the real risk here, is that valuations really across the metrics of analysis, whether it's price to sales, price to growth, or even Warren Buffett's favorite indicator, market cap to GDP, these are at historically high levels, which really suggests that no, there's not real value in value. And the other problem with value, as we've written about in the past, is there's really not a lot of value there. And a lot of these value stocks, quote unquote, those are where most of the zombie companies live, where they've been living on cheap debt, low rates, etc.
Do you expect these valuations to normalize at some time in the future?
That's a great question. See, normally coming out of a recessionary environment like we saw coming in, late 2020 and now into 2021, you would normally expect value to outperform growth because valuations had reverted during the bear market. Like we saw in 2008, big correction in valuations. The problem this time was because of all the Fed intervention, the government stimulus, etc., valuations never corrected in this recessionary period. So it's very likely that we're going to see another problem with stocks within the next couple of years. Theoretically, after this next stimulus flows through the economy, we're going to start to see valuation problems arise again, earnings problems for companies. Wouldn't surprise me to see a bigger correction in markets in 2022, 2023.
So you feel with this type of stimulus, etc., I think you used the analogy before about the sugar rush, giving the kids sugar, and eventually it's going to be a bigger crash.
Well, yeah, it's like, you give your kids a bunch of sugar and about 30 minutes later, they're in a fetal position, sucking their thumb somewhere. That's what'll happen to the economy is we'll have this big run up in economic growth in Q2 and Q3. We'll probably see our peak earnings growth, peak corporate profitability in the next couple of quarters. And then everything begins to revert back to the long-term means, which are going to be somewhere around 2% growth economically because of the debts and the deficits. And unfortunately, now we're going to be looking at $30 trillion in debt by the end of this year. That's going to be economically very damaging long-term.
We see someone like Warren Buffett sitting on, I think it's over $200 billion in cash. You think he's just waiting for this moment?
Warren Buffett is a long-term investor, right? He's got a problem that is not just a function of market valuations. That is a big problem for him. He's got a lot of cash that he can't deploy because he really can't find something to buy. But his problem is he can no longer buy small companies, right? He's got to buy really big companies where he can deploy a lot of capital at one time. So it's a size problem for him, but it's also a valuation problem for him. So, his stock is doing very, very well right now because it's very economically sensitive and we're seeing a lot of recovery. So people are buying that, kind of Berkshire Hathaway stock. It's almost like an index fund of economic growth. But it's extremely overvalued now. So you're probably going to see a correction there as well once we begin to see the economy revert back.
Very good. Lance, really appreciate it as always. Thank you so much.
My pleasure. Thank you.
Apple's setting up a new chip design center in Munich, Germany. It says it'll be Europe's largest R&D site for mobile wireless chips and software. NTD's Patrick Hayden reports.
Apple's building a major new chip lab in Munich, Germany. It's part of a $1.2 billion investment in the country over the next 3 years. The new facility will be home to Apple's growing cellular unit. The company says it will be Europe's largest research and development site for mobile wireless chips and software. Munich is already Apple's largest engineering hub in Europe with 1,500 engineers. They helped design the first chip specifically for Mac, the M1. It improved performance and efficiency across Apple products. And during that time, the company says it spent nearly $18 billion with more than 700 German companies. Currently, there's a worldwide shortage of chips, which has affected the automobile industry, among others. The German government has recently been pushing other countries to provide it with more chips for its car industry. But Apple says the new lab will focus on 5G and future wireless technology. It's set to open later next year. Patrick Hayden, NTD News.
General Electric is reportedly shifting its focus from finance to its industrial business. Now it's selling its aircraft leasing unit to Ireland's AerCap for more than $30 billion, creating a new financing giant. Conway G. Gittins reports.
The world's two largest aircraft leasing companies are combining in a more than $30 billion deal that will create a new financing giant ahead of an expected rebound in global air travel. General Electric is selling its aircraft financing arm Gekis to AerCap of Ireland, according to details revealed on Wednesday. Rumors of a tie-up have been circulating all week. The combination creates a portfolio of more than 2,000 jets. That's 3 times as large as its nearest rival. And as the biggest buyer of jetliners built by Airbus and Boeing, the merger forms a company large enough to reshape the global air finance industry at a pivotal time. Several smaller leasing firms have struggled to survive over the past year as the global health crisis resulted in a slump in global air travel, forcing airlines to park planes and delay deliveries. The sale of GE Capital Aviation Services is the latest effort to clean up the balance sheet and streamline operations at the humbled industrial conglomerate. CEO Larry Culp came in 2018, vowing to reduce debt and refocus the company on 4 core industries: power, renewable energy, aviation, and healthcare. Shares of GE have been rebounding under his tenure and are up 23% so far this year.
So what'd you do to pass the time during lockdowns? Many families turned to Lego. The company now says the pandemic helped it return to double-digit growth last year. NTD's Evelyn Lee reports.
If you're bored at home, you might want to hop on this trend. Families under lockdown are staying in and building Lego models together. Lego CEO says it helped the company return to double-digit growth rates last year. Niels Christensen said the company made large-scale investments designed to support long-term growth, and it paid off just in time for the pandemic, especially in e-commerce and product development. It now has a better online sales system and new sets to build, like robots you can program with your smartphone. Lego sales grew by 13% last year, up from 6% in 2019. The company declined to comment on the online sales growth, but it said the number of visitors on Lego.com doubled to over 250 million in a year. Last month, rival toymaker Mattel, behind the Barbie brand, reported 2% net sales growth for 2020. And Hasbro, the maker of Monopoly, saw net revenue decline 8% for the year. Christensen said Lego gained around 1 percentage point of market share globally, picking up in most of its markets. For 2021, he says Lego's looking to hire several hundred employees to further boost its shift online. Evelyn Lee, NTD News.
Still to come, the CDC finding new ways to bring vaccines to rural America, where the access is still limited. And a decade after the deadly tsunami devastated Japan, a businessman returns to the place where generations of his family's work was almost destroyed forever. That and more after the break.
If you're like me, and I think it's actually most of us, then you're getting really fed up with the nonsense going on inside the banking system. I mean, we've worked hard our entire lives to retire comfortably. We just recovered from the crash of 2008, and it seems like it's about to happen all over again. Look at the too-big-to-fail banks. They're only getting bigger as the Fed hands them trillions of dollars daily, while simple folks like you and me, we're only getting the short end of the stick. That's why I'm glad I found this book called The Bank Failure Survival Guide. Give us a call, and we'll send you a free copy with no obligations whatsoever. Just one American to another, telling you about some options that you might not have considered. Call 866-239-2619 today for your free copy of The Bank Failure Survival Guide. That's 866-239-2619.
When you look at TV networks in America, a soundbite and fight-it-out culture prevails on news and commentary programs. As a Canadian, I'm fascinated with America, and I wanted to offer American thought leaders an opportunity to share their thoughts in a deep dive format where we can explore their ideas together. And so American Thought Leaders was born. The world's most brilliant thinkers believed that open discourse was the key to greatness. However, all around the world, we see that discourse is being stifled and political agendas have subverted media. The Epoch Times launched its Global Thought Leaders program to bring back this great tradition of free thought. As the host of American Thought Leaders, every week I interview some of the most intriguing minds on the most pressing issues of our time. Be sure to check out our new episodes every week.
Here's a privacy breach on another level. A group of hackers say they got access to over 100,000 security cameras across the country.
An international group of hackers is claiming credit for gaining access to live feeds of 150,000 surveillance cameras across the U.S. and the world. These cameras are in jails, hospitals, schools, and companies, and they all come from a Silicon Valley-based security system supplier called Verkada. Car maker Tesla and software company Cloudflare also had their security cameras breached. A video seen by Bloomberg is believed to show a Tesla warehouse in Shanghai, China. Other videos seen by Bloomberg reportedly show the inside of women's clinics and psychiatric hospitals. And the hackers claim they gained access to over 300 cameras inside a jail in Alabama. Reportedly, the hackers say they lost access to the video feeds and archives after Bloomberg contacted Verkada. One of the hackers from the group claimed credit for breaching Verkada's system, saying the group did it because they wanted to show the pervasiveness of surveillance cameras and how easy it is to break into the system. That hacker also said it was too much fun not to do it. The group also claimed credit in the past for hacking chipmaker Intel and car maker Nissan. Many of Verkada's surveillance cameras have facial recognition technology. That means customers can search and filter results based on a person's face. A representative for Verkada says it is investigating the scale and scope of the potential issue.
The CDC says it wants to partner with Dollar General to help speed up vaccine rollout in rural areas of the United States. Many rural Americans don't have access to big box stores that many are going to get vaccinated. Dollar General is one of the nation's largest retailers with more than 16,000 locations. It's about 3 times as many as Walmart, about more than half as many as CVS and Walgreens. Dollar General also recently announced it would give staff members 4 hours of pay to get vaccinated. And Clorox saw a massive demand for its cleaning wipes when the pandemic first hit, and now it's hoping to grow its business-to-business sales. As restrictions are lifted, more people will venture out of their homes, and that's why the company is evolving its marketing strategy to focus on businesses. It's partnered with companies like United Airlines, Uber, AMC to use its wipes to keep surfaces clean. And for whether those wipes will be available, Clorox says it has ramped up production. It doesn't expect the same types of shortages we saw last year when wipes were almost impossible to find in stores. And tomorrow marks a decade since the massive tsunami and nuclear accident happened in Japan's eastern coastline. In the aftermath of such a disaster, how do you rebuild? Well, this Japanese soy sauce maker may have the answer. In spite of several challenges, he found a way forward through optimism and a generous attitude.
In 2011, a powerful tsunami wreaked havoc on Japan's northern coast. More than 18,000 people were killed, and over 160,000 evacuated the region.
The folks who passed away are people who wanted to make this into a great town. When I meet them again in the next life, I want to do things that will make them say, "Well done, you did it."
Michihiro Kono is the 9th generation owner of a soy sauce company. The tsunami destroyed his factory 10 years ago, and the damage was estimated at $2 million. But Kono continued paying his employees even without anything to sell. The biggest loss was the 200-year-old cultures needed to ferment the soy sauce. Kono had donated a few cultures for cancer-fighting research, and the medical facility was also destroyed by the tsunami. But by a miracle, the cultures were untouched. Kono restarted soy sauce production in 2013. He named the new soy sauce Miracle. Now, construction is almost complete on a new factory. It is being built on the same ground where Kono's family first began making soy sauce in 1807.
I think this is a critical moment to see if I can do something worthwhile. After 10 years, to come back to where I was originally born, it's like I'm at the starting line.
Kono's dream is to revitalize his home city. The pandemic has left the city lifeless and caused sales to drop by 20%. But Kono has weathered disaster before. He made use of the time to learn specialty skills with his employees.
To be able to do something for someone else will save your heart. Otherwise, you trap yourself waiting for COVID-19 to be over. It will affect your heart. So I think this is a great opportunity to do something for someone else or for society.
It is Kono's optimistic and giving spirit that helped him rebuild his company and carry on this long family tradition.
That's the latest business updates for today. You can still catch NTD Evening News with Stephanie Cox at 6:30 p.m. Eastern. For NTD Business, that's all for today. Thank you for watching. We'll see you tomorrow.
Don't let YouTube decide what information you get. That's your choice. YouTube is deleting our videos and cuts you off from a source of honest reporting. Make sure you don't lose access to NTD's news content, and take a quick moment to subscribe to our newsletter so no matter what happens here, you'll keep your access to a trustworthy news source.